He is the chairman of O'Leary Ventures. He is the host of both Shark Tank and Money Court, as you're about to see on CNBC. Mr. Wonderful, back on the show. Kevin O'Leary, great to see you.
Great to hear. Thank you very much.
We have a lot to unpack, a lot to discuss. Kevin's been gracious enough to come by and give us his insight, give us his knowledge to this point as to what has not only happened with FTX, but what is still happening and what is going to happen going forward. Let's kick things off here, Kevin, with just a bit of a backstory maybe. You had a very publicized, paid relationship with the company itself that involved a significant amount of money, funds of your own as well. A lot of people watching right now with a ton of questions in regards to where are we at in this process? Fraud, we can leave to the courts to decide. Where are we at in this process? Can we give people, some sort of indication as to whether or not they can see or look forward to seeing anything back in this?
Yeah, that's a great question. In fact, you're right. The narrative on the whole FTX issue has changed. It's no longer about the trial, which will happen who knows when, but more about recovery. And so since this story broke November 6th, a lot has transpired in terms of identifying assets. For example, now remember, these are alleged rumors, but it's where there's smoke, there's fire, because the regulator has not released the trading records yet from each of the accounts. But here's what we got so far. And obviously, I'm an active participant. I've got my own army of lawyers like everybody else does, both as an equity shareholder in both FTX International and FTX US, but also I had over $10 million in assets inside multiple FTX accounts, which were scraped with no trading records left. So let's go first to recovery. It looks like the Bahamian government has $4.2 billion sequestered. And then there's another $1.2 billion alleged to be sitting in the US, FTX US, another $400 million of cash. But now what everybody's focusing on are all the assets inside of Alameda. Remember, Alameda bought a lot of stock, a lot of deals. They own a ton of Robinhood. They have a bunch of other assets in public companies. They own a piece of WonderFi, for example. And so all of these are being looked at by hedge funds and high net worth individuals and private equity firms because in order to sell Alameda, which will be done in an auction process, you need a first bidder, a backup bid. And that's going to end up being somewhere in that $800 million to $1.5 billion range. That's sort of the bid ask right now on that. So there's a ton of cash sitting around here. And so I have to be, I'm always optimistic, but before this whole thing plays out, there's going to be some recovery. And I don't know how long that's going to take. But what everybody wants right now that had an account is to turn on the server again so you can see your account, see the trading records, but keep it gated so you can't put money in or take it out, but at least see the records before April 15th when everybody has to pay their taxes. And so you got a lot of cross currents going on, but nobody's talking about Sam Bankman-Fried anymore or the trial or alleged fraud. They just want the money, and that's the way it should be.
And a good point in the sense that, there's so much involved in this from people, just ordinary people, a lot of, whom are watching right now. So that's why I was mentioning, can we give them some sort of indication, some sort of hope in the sense that, some sort of funds are recovered. So good to hear that the process is underway. I want to talk about the process of investing and the process of venture capital in a sense that this was the who's who of investors involved in this company. I can read off, a very impressive list. Sequoia Capital, Ontario Teachers Pension Plan, Third Point, Dan Loeb's Third Point Ventures, SoftBank, Alan Howard, Peter Thiel, Paul Tudor Jones. The list goes on and on. Everybody's heard about the celebrity side of things as well. Talk a little bit about due diligence when it comes to before money goes into something like this, and also how do we, on an ongoing basis, not see something on the wall as an indication of this going wrong?
So let's go through that list. I'm on that list too, and I can assure you, having talked to many of those participants, we all feel like idiots, of course. But the real question is, will this change how we invest? And the answer is no. So let me explain why. FTX was a startup, a big one, but a startup. And we all invest in startups. I don't care if you're private equity or you're venture. There's capital around for startups because the returns, if you get a successful deal, are extraordinary. So if you look at data back from 1954 in the Boston area where venture capital started, and you look after all those decades, 8 out of 10 deals either fail or are living dead, and 2 out of 10 are extremely fantastic outcomes and pay for all the other 8 mistakes times 20, times 30, times 40. So for every FTX, there's a Google. You know, for every Lehman Brothers, there's something else. There's always something going to zero and something going to the moon. That's the way it is. And so when you look at due diligence, you ask yourself, okay, let's say we had done more due diligence. Would that change the outcome when you know 80% fail? Probably not. Now, they fail for various reasons. In this case, alleged fraud, and we'll see how that plays out. But this doesn't change anything about the way I'm going to invest or, you know, how any of those other firms you just listed are going to invest. And the diligence done here, I don't know if you know this, but Tiger spent millions with Bain Capital to diligence this platform before they became one of the lead investors. And everybody knew that. So there is a lot of, you know, when a deal like FTX US comes out and it's so hot to get an allocation, they're not worried about due diligence because they know 8 out of 10 times it's going to fail. They're hoping they're going to get one of those unicorns. The one thing I'm very, not proud of, but happy about, when the FTX US deal, when the word got out that I got allocated equity, I got inundated by institutional capital, high net worth hedge funds saying, you got to give me a piece of your allocation because you owe me. We've been doing stuff together 20, 30 years. But I had this gut feeling, not that I was involved in something nefarious, but it was so nascent, so early, so volatile. I said, no, I'm not going to put anybody else's money into this thing. I'm going to keep my own dough in it. That's it. And whether it's a success or a failure, I'm not going to put someone else in front of that freight train. Either way, I am so happy I did that because other people that are managing other people's money that put it in FTX are getting litigated in both directions. I'm not one of them. I look like an idiot by myself. That was all my own money. It all went to zero. It was all in my operating company, of which I'm 100% owner. So the operating company took a hit. I hate losing $18 million. It really pisses me off. But, you know, I've had great investments and I've had bad ones. This goes in the bad column. And does it change the way I'm going to invest? No, doesn't. Got up in the morning, got right back to it.
I want to go back to Alameda, as you mentioned earlier. This was a note that came out shortly after this news broke. The appointed CEO, Ray, in a court filing, essentially implying that FTX was transferring funds from the exchange to Alameda, which was the trading side of things. I mean, we all know in a regular banking environment, this is just a no-brainer, no-fly zone. Give me your thoughts here. I want to get into regulation and where we are in the process of more regulation coming in this business, but give me your thoughts on this story.
Yeah, John Ray testified in front of the Senate a few weeks ago. I testified there as well. What everybody's waiting for are the trading records. So if it's alleged that transactions occurred between Alameda accounts and FTX accounts and clients' accounts, the alleged so-called trades, then show the records. Everybody wants to see them. And so obviously these records are going to have to come out before a trial. And I think because we're in this discovery period, in this trial, maybe it's going to take a while to get them out. But, you know, when people tell me, did that happen or not? Well, show me the records. I mean, like everybody else, we've got to see the records. And they exist. Apparently, they're backed up on the AWS service Amazon has, and we've got to get them. So Ray's under quite a bit of pressure right now by account holders. You know, you make a claim like that, you got to show the records. And so let's see them. Now, to your point on regulation, if there's any silver lining to this whole FTX thing, and let me tell you, when I went down to those hearings in Washington, when the hearings were over, they take about 4 hours or so. All the senators are still there. So we started, you know, we mingled and we started talking. Here's what I realized about this. These senators are really, they're fatigued. They're really tired of gathering every 6 months when the next crypto company blows up and goes to zero. I mean, just last week, Genesis filed for bankruptcy. Every week, there's another one going to zero because they're totally unregulated and they keep issuing tokens that are worthless. The latest, game that FTX did as well as Binance is they issue a token that supposedly gives you some special ownership of the platform. That's not true. You own nothing. There's no rights to it. It just gives you trading discounts if you own the BNB or the FTT token. But if you look at, let's say, the reason FTX went to zero is CZ, the competitor of FTX, Binance's head guy, put 550 million tokens right on Sam's lap on November 6th. He couldn't carry it. He didn't have 550 million cash. They had to go to bankruptcy. And I think it was a brilliant move on CZ. He wiped out his competitor. But now CZ's got the same problem. He's got regulators humming around him like a wasp around a beehive. And he's got $64 billion worth of BNB tokens in 2 wallets instead of 97% of all the allocation. Well, what happened? I don't know who owns those wallets. Nobody knows. Nobody knows who owns Binance anyways. But what happens if one of those wallets, somebody wants to sell $30 billion worth of tokens, just like they put them to Sam Bankman-Fried? That'll be the sound of Binance going down the toilet. So these things are going to keep happening over and over again. And my point about regulation is the senators, well, they're pissed. And you ask me why Gensler is coming down heavy-handed on Kraken last week and shutting down staking and telling every player in the industry in the U.S., read the room. I just whacked Kraken for $39 million fine. Who's next? Bring it on. So that kind of environment is getting very, very aggressive. And the regulators are being applauded on by the senators and congressmen and women who are saying, what is this? We've had enough of this stuff. So I think the good news for me as an investor, frankly, to turn this into a positive story, would be that I own regulated exchanges. WonderFi is regulated. In Canada, it's regulated. I think the value of regulated exchanges is going to go up over the next few years, while all the unregulated ones get put out of business or go to zero by the regulators. So that's where we're at in crypto. You got to get on board on regulation. You got to stay out of the way of Gensler at the SEC and other regulators. Those hombres in Washington are not happy. And they poked the bear. FTX poked the bear. The bear's awake, and it's pissed.
Give me a time frame here. When do we see meaningful regulation?
Hearings right now. Banking Hearings Committee looking at digital payment systems. I think there'll be another set of hearings early next month, in March. They're going to keep coming. Elizabeth Warren's on a warpath right now about crypto being used for nefarious transactions. She's after, allegedly an $8 billion USDC transaction that went to a rogue nation. I mean, it just could. The tone of this market is so negative, it's probably time to get back in.
And that's a great segue. On the other side of things, we saw the highest inflows into crypto markets in January since last May. Money coming back into crypto across the board. Tell us where you're involved and how you're involved at this point.
Oh yeah, as soon as I got wiped out on FTX, my holdings there, I took every other asset that was not in those wallets and moved them up to Canada under the OSC order inside of BitBuy. So now I've got a regulator keeping an eye on my account. Everything came out of the US. I'm not putting anything ever into an unregulated exchange again. But I also loaded up on Bitcoin when it was in that $16,000 to $17,000 range. But here's something I've learned everybody should think about. Everybody's got to do their own diversification. But I used to hold 32 positions. So I'd look at the vol on 32 positions. Now I only own 7. I'm getting the same vol. You don't need to own 32 tokens to get the vol. You can just own a few and you'll get the same volatility up and down. So now I'm more concentrated in a Bitcoin, a Polygon, an ETH, that kind of thing, HBAR, very, very selected projects, very selected tokens, and I have liquidity in, and I like to stake them. The good news for BitBuy in Canada, it's one of the only 2 licenses where you can stake. So I've got my Polygon staked there, which is great, and you're getting some kind of yield, and it's regulated. So what I'm telling everybody to ask me is, look, you can get the whole exposure to the entire crypto market with under 10 positions. And that's the way I'm playing it going forward. I don't want to manage 32 anymore. I got a real lesson in life on that whole thing with FTX. But now I'm still back in one of my best performing asset classes. You said it, crypto since Jan 1. But you try telling anybody that. They're so negative on crypto. I like it when everybody hates a sector. It's like energy 18 months ago. I hate energy because Biden hates energy. That was the time to load up.
And a good point. And I know Sean wants to talk to you about energy. I want to leave that for now. But I want to get your opinion on, just to shift gears a little bit. Last we spoke, it was about summer, I think, last year. We were at the height of the inflation mess. We were at the height of the economic trouble at that point. You on this show said you were targeting Q4 or at least the second half of 23 before we started to see some sort of improvement as far as not only inflation, but in a sign of getting back into equities. Are you still on that time frame? And if not, what now?
You know, I haven't reduced my exposure. What I did we haven't talked since the end of last year. So in mid-November, right up to Dec 15th, I sold my losers like everybody else. So I cleaned out a bunch of positions that I was down on. Some of those names, there were high vol tech names I'd lost 60, 70, 80% on. So I took the tax loss. But I repositioned that cash into more conservative positions. And I like to buy stocks when I'm parking dough in the S&P that pay div, that are, you know, good, strong balance sheets. I bought some mid-cap stuff with the paid dividends. You're getting kind of 200 basis points on dividend yields. A good place to park money in the large cap. Same for Canada. I mean, you know, you could park some money in some Canadian banks, get a div. The point is, it's very, unless you're willing to stomach real volatility, every time there's a print on inflation, on any long duration asset like tech, you're going to get wild swings, and we have had that. But having said that, I actually think equity markets for this calendar year, because the recession has been still put off, we might get a soft landing here. That's what the data says. That print on retail sales a few days ago at over 6%, I mean, you don't see that very often. That was incredible. So supposedly you're going into recession, but we're still at full unemployment, and we get just a knock it out of the park number on retail that you never see that. And so that's got to have the Fed saying, okay. I mean, I can imagine the Fed, you know, looking at that number saying, we're going to just crank it up another 25 basis points and then another 25 basis points. So what that makes me think is the market's probably thinking a terminal rate, that's when the Fed stops raising it, around 5.2%. You're going to see that in Q3, but it's baked in. And so that's not a crazy amount in history, you know, 5%, 6%. We haven't had a massive collapse in terms of employment, or the only issue that's a little sticky is core inflation on food is pretty nasty. Housing's rolled over. It's in the CPI, but it's a leading indicator. It's 18-month-old. I think it's easy as she goes, looking for an 8% overall return on equities if you go a little larger, higher quality till the back end of this year. I don't see a meltdown. The economy is too strong, and that retail number, as I like to say, ichi wawa caramba, was that incredible.